Hi, folks. My name is Girish, the host for Back to Basics, another Back to Basics for another week. We're going to be talking about mortgage and finance and real estate from the Canadian side instead of the US side. Are we dealing with the same thing as the US people are doing? Let's find out from the Canadian side of things as to how different or similar it is between the two markets. So, and I invited Giovanni. Giovanni is a great friend. I've talked to him many times on a different platform, different social media, and he's here as a friend, as a real estate guy and a finance guy. So we'll get into that detail of that. But Giovanni, how are you? And thanks for coming to Back to Basics.
Hey Girish, I'm doing well, man. I'm out here in Panama, spending some quality time with my girl, my slash wifey here. Uh, we're basically on the halfway point. I'm going to be heading back soon, but I can get used to this lifestyle.
Okay. Yes. Thank you. Thank you. Thank you again for talking to us while you're on vacation. Uh, but before we get into the details of the topic for today, what
Mhm.
does back to basic mean to you?
Um, you know, like I would say for me, back to basics is in order to create something that you're really good at, is a foundation has to be built beforehand, right? Without a foundation, the building is just going to collapse. So in my regards to what a foundation is, like basically knowing, for example, the rules, knowing what comes first in order to become better rankings than what you professionally do. You can't just start randomly and, just shoot your shot and go by year from there. No, I believe where you got to humbly start somewhere in order to get where you want to be
Hmm.
more further on. I wouldn't say there's a final destination to what you do because every day you're learning something new.
Hmm.
Even if you're in the industry, whether it be 1 year, 5 year, 10 year, maybe even 20, somebody in the 20+ year industry is going to learn something new, something every day, kind of thing. That's what I solemnly believe. Going back to basics, even if you forget something, if something doesn't go wrong, it always goes back to where you started to progress further on. That's what I solemnly believe what back to basic is to me.
Yeah. Thank you again, Giovanni, for explaining that in your own basic way. So thank you for that. So before we
Mhm.
get into the episode, Giovanni, just give me one more second. I need to go and tell my audience one thing here before we start. So, guys, if you remember back in March when I released all the mortgage questions and refinance questions for season 2, we talked about from the US side of things. So I recommend that you listen to that episode, then you'll understand from the Canadian point of view. So, and plus, there has been some comparisons on the last episode that I've talked about back in March from season 1. So, yes, this is going to be a yearly thing for me to understand between the two markets. And hopefully, Giovanni and someone else from Canada will be there to help me out to compare the two, seasons. So, thank you again, Giovanni, for being here and explaining that. So, is it really that different between Canada and US market when it comes to mortgages or even finance?
Um, it's funny that you mentioned that because I did have a mutual conversation regarding to that with a mutual friend of ours in the social media platform. She used to be a realtor and a finance officer that she mentioned, and she said that in order to get pre-approved to buy a home is you got to go through a mortgage agent or a mortgage broker, you guys call them.
Hmm.
We have the same rules. It's like the differences between a mortgage agent and a mortgage broker here in Canada. One, they both can do the same job. The broker can open his own firm and hire other mortgage agents along the same firm. Now, there is a criterion in order to become a mortgage broker. You have to be a mortgage agent within 2 years.
Hmm.
After 2 years, then you can apply for your mortgage broker license, and then you can create your own firm moving forward.
Hmm.
Now, I think you guys measure credit score called FICO, correct?
That's right.
Yeah, for us, we call them Beacon score. Some places call them FICO. Uh, the score does count to what you are qualified for in terms of rate. So if we have poor credit here, we can still get you a mortgage, but you're not going to get the best sort of interest that you're going to get when you buy a home.
Hmm.
Um, if you're a first time buyer, I would recommend having a really well established credit For us, starting from let's say 680 and going up will help you get to a pretty decent rate for your first time buying a home.
Hmm.
But if you're an investor kind of thing, sometimes that may not even matter because in order to be an investor for a home, you have to put a certain amount of money down, which is minimum 20%. But
Hmm.
there's some pros to that. So you can increase your amortization term.
Hmm.
We can do as high as 30.
Hmm.
Depending on your credit, you can go more than that. I think you guys offer 35-year or 40-year. Is that true?
We do 30, and I think we're getting into the 40 right now, if I'm not mistaken. But I think 30 has been the max that I grew up with. I think
Yeah.
lately it has been 40.
Okay, so there is a 40-year amortization here, but there's a catch. The
Okay.
catch is you're going to be getting a higher interest rate
Hmm.
because unfortunately for 40-year amortization, your credit's not strong if you need a home. Like these are for people that are desperately need a home and
Hmm.
they can't do a 25-year amortization because you need to put 20% in order to do 30-year.
Hmm.
And in my market where I currently reside at in Toronto, not many people can put 20% down. So they
Hmm.
try to do they try to do at least 5 to 10% on their own. Even then, that's a little difficult because the real estate market is very volatile.
Hmm.
Something like 2,000 square feet is 700,000, if not more, depending on the region of Toronto you live in. So what
Hmm.
they do, they bring somebody in with them,
Hmm.
co-applicant.
Hmm.
Um, a co-applicant can be hit or miss, whether they may have amazing credit, but they have a lot of debt because we
Hmm.
fit in an industry standard where your gross debt service ratio has to be at least 39%,
Hmm.
and your total debt service ratio cannot be higher than 44%. Even if
Hmm.
you are one decimal point overreach, the bank will not take it.
Hmm.
There may be one slight exception is if your credit is up like A1 credit kind of thing.
So it's pretty much the same thing in the U.S. that if you don't pay your bill on time, that your credit goes down, right? But then you have to work hard at to get the credit up.
Yeah.
So then that would be tough just to get mortgage. But then if you don't get mortgage and that credit score, then your credit interest rate will be high. So it's a catch 22, isn't it?
A little bit, but keep in mind, for the some that don't really have great credit, there are the some that do have the money to put the down payment.
Hmm.
So the ones that do have that fit in that category, I give them a heads up. Be like, hey, like you know what, your credit's not that strong. We can get you into a different bank. After your renewal's coming up, your credit's going to be stronger depending on how you are responsible with your payments. We can get you in a better rate after your renewal. There's
Hmm.
options to that. So some people, at least over here where I'm at, I don't know how educated some people are in the mortgage industry where you're at, Garish, but
Hmm.
not many people are educated into the mortgage industry in my area. So
Hmm.
what I like to do free consultations with my clients or potential clients because they think there's a cost. Like I recently had a client who's like, "Oh, is there a cost to just talking to you?" I'm like, "Absolutely not. This is totally pro bono. This is for me to help educate you. That's my mission. My mission in my profession, Girish, is to help educate my clients so
Hmm.
they know what to do forward. I like to give them options. I don't like to be the order taker kind of thing to them. I want to help cater to their finances and also help get them into a better position where they're at before. That's my
But
mission.
but Giovanni, let me ask you this: is it only in the Toronto area, or is it just pretty much anywhere in Canada itself that it's a problem?
Um, so from what I caught on, it's mainly Ontario. So you know how America has states, Canada has provinces. So it's the same concepts, just different symmetric system.
Hmm.
So there's different provinces. Ontario is probably one of the most expensive provinces in Canada that have in terms of real estate.
Hmm.
I want to say second is Quebec,
Hmm.
and then third, moving forward, is like going around to the west side is like Saskatchewan, Vancouver. Vancouver's actually up there too. So sorry, Vancouver's a city. I'm correcting myself on that. So British Columbia is the province of Canada. It's a pretty big province, but one of the high end cities there is Vancouver.
Hmm.
So, but it's a mix. So there's another province called Alberta where their real estate is actually not that bad.
Hmm.
Um, They're a lot. So I'll give you an example. An average home in Toronto, like I said, is about 700,000 plus for a 2,000 square foot home.
Hmm.
You can find something very similar in a city called Edmonton or even Calgary that would
Hmm.
have maybe two to 300,000 less than what I just said. So it could be
Hmm.
400, 500,000, give
Hmm.
or take.
Hmm.
Something like that does exist in Ontario, like Toronto, but you have to go at least 2 hours, an hour to 2 hours further away from the main city to find property like that.
Hmm.
One, the house is old, so it's going to need some work. Some people may not even be about it. Second is they want to be closer to the city because their job, right? They don't want
Hmm.
to commute an hour or two just to go to work to say they own a home.
Hmm.
Some people are, it's a double-edged sword there. Yeah, you get a cheaper home, but you have to commute. That's the problem.
Hmm.
So,
So no, no,
yeah.
go ahead, please. No, no, go ahead.
Sorry, I was gonna say another thing too that people are also discouraged about is, let's say you want to buy a home, you found something with an amazing price, you put an offer on it. That next person next to you is going to outbid you another 100 grand minimum, and
Hmm.
that's 100 extra $1,000 that you probably can't even afford.
Hmm.
Sometimes it goes more. The highest bid I've heard over was maybe 250K over
Hmm.
asking,
Hmm. Hmm.
and
So,
and I can understand it's very discouraging.
so I mean, Giovanni, we're talking pre-COVID time, right? But is this happening
Yeah,
today also?
it's been happening for a while. It's
Okay.
been something like this has been volatile for quite some time. So the beginning of the pandemic, if anything, it slowed down. After maybe 6 months to a year, that's when things were becoming a seller's market in our end. I
Yeah.
can't really
So
say if it speak on your behalf in your area. I don't know if it's the same, but that's what's been happening.
yeah, yeah. So we're gonna get into that detail there, but let me just ask you one more question if you don't mind. So
Sure.
when it comes to refinancing, are we able to refinance every what, 6, 7, 8 months, every year? Or is it just a one-time thing for a long time? So how does that work in Canada? Is pretty much the same thing or different?
There's actually various of options. That's a very good question. You can refinance your mortgage as low as 6 months. There's 6 months term. There is a year. There's 2 years, 3 years, 4 year, and as high as five. The highest is
Mm.
5 years. I haven't heard anything more than that um, until further notice. But the highest I know is 5 year. Now, keep in mind there are some pros and cons to terms depending on your situation, of course, right? People like prefer to do the 5 year because they offer some decent substantial rates. Um, what I would recommend to, depending on the financial position for some clients, the 5 year is the best route to go if you're going for a category called A lender. A lender would be classified to the major banks. Like, for example, we have a bank called RBC, which is probably the same level as Citibank for you guys.
Hmm.
Or do you guys have ICIC by any
ICIC is in
chance?
New York City. Yes.
Yeah, so we have that bank too. So stuff like that, like those high major end banks. We have a bank called Scotiabank. We got CIBC. We got TD. You guys have TD Bank. You guys call them TD Bank. We call them TD Canada Trust here. It's the same concept, just Canadian side.
Got
That
it.
would be classified as A. B lenders would be like the not the big banks, but they're banks that can help these kind of clients, kind of thing.
So I just want to be clear. So you're talking that if I had a 30-year loan term,
Hmm.
I will refinance to a 5-year loan or a 2-year loan. Is that what you're saying?
You can do that, yeah. So after 5 years, after your first refinancing, you can refinance to a different term of your liking. Or, for example, if you want to pay off the mortgage faster, you can actually reduce your 30 year to 25 year if you want to do that too.
Okay. So the example that you're talking about is that we can refinance every 6 months to 1 year to 5 years. Is that what you're talking
Yeah,
about? Okay.
correct. So another thing I actually wanted to bring to your attention is, let's say you have a 1 year term, you can actually refinance sooner if you really want to, but there's a cost to that depending on your term of contract of the term. So if you're on a fixed rate, you're going to be charged a certain amount of interest of the remaining months of the term.
Hmm.
But if you're in the term called variable, because there's fixed rate and variable, with the variable rate, you're going to be charged about 4 months of interest. of
Okay.
the of your outstanding balance, kind of thing.
So, okay, so let me ask you this. Now, you bring up a great point. So, there's a fixed rate, and
Hmm.
then there's a conventional rate, and then there's a FHA rate. Now, is that
FHA.
FHA kind of the similar to you, which means that people who are not able to pay a certain amount per month or down payment a certain amount, then there's a premium insurance on top of that mortgage monthly. So, do you have
Okay.
something similar to that in Canada?
Yes, we do. We have a program called CHMC. So
Okay.
it's very similar to what you guys call FHA. Is that what you said?
Yes.
Yeah. So it is a type of insurance that go with the purchase of the home if you do not put 20% down. If you put 20% down of any purchase you inquire, then you have to take the CHMC with that.
And then after when that is done, how quickly can we get out of that? Is that when we get the 20% equity on the mortgage?
So in order for you to be out of the CHMC, there's two ways. You either do the 20% down, or you would have to do the renewal after that, which is could be 5 year, could be whatever term that you are qualified for, kind of thing.
Got it. Got it. Okay. So
Hmm.
that's pretty much the same thing as us. So just different names. So thank you again for explaining that, because obviously, as a US person, I'm not sure what the details are in the Canada side, and this is why we're having this show, is to
Yeah.
explain certain people to make them understand what the differences are. Now, you brought up a point about the sellers market after COVID, which is the post, right? And we're still going through it, kind of. So, why is it a seller's market? Is it people are getting away from the city and going to the suburban area, or what are your thoughts on that?
I think one, for example, um, real estate is not going to get cheaper anytime. I don't think ever, to be very honest with you. I think that's something that a lot of people from the States and Canada can agree. One, so two, it's one of the best investments you can make in order to create generational wealth. For example, like if I buy another property after how many years, I can rent it out if I really want to, and I can just create passive income through that. So a
Hmm.
lot of people are. And another thing that is responsible to why people are buying homes left, right, and center is social media, TikTok, Instagram, Facebook. They're all advertising like, "Hey, how can you make money through real estate?"
Hmm.
People are opening up their avenues. Ever since a lot of people have lost a lot of jobs through COVID and everything, they're
Hmm.
trying to find ways to how to generate passive income. So
Hmm.
social media is a big role of that. Other
Hmm.
things too is having conversations with other professionals like realtors, people that have been flipping homes for like how many years. They're getting more familiar with it now. Why the market is getting higher? Because due to supply. We don't
Hmm.
have many homes where I'm at right now. People are buying them left, right, and center. So that's another factor why the market is getting higher and higher every time.
Hmm.
Another thing too, as well, interest rates. Bank of Canada is announcing that interest rates are going higher.
Hmm.
Um, that's another factor. People are buying homes too. Another thing as well, foreigners, people that are immigrating into Canada, they're buying the homes cash. They're not taking the loans. They buy it cash. It's crazy.
Hmm. Hmm.
Um, Another thing too, like I don't know if you noticed, but during the pandemic, supplies were getting more expensive too. Like
Hmm.
cost of lumber, like getting a certain amount would you would pay like an arm and a leg
Hmm.
before during COVID. Now imagine pre-COVID, it was like a big chunk of price just went down from there, but it's just
Hmm.
going higher.
Hmm.
Inflation too. Um, and then that's also discouraging a lot of people in my generation as millennials to buy a home. So what do? They move out. They move out of the country. They move out to a different province because the marketing is for real estate here is just getting ridiculous.
Hmm.
And some of them do have help with their parents. What they do, the parents have their own home, so they refinance to get some equity out to buy another home for their kids. That's what some
Hmm.
people do.
Hmm.
Or they get really lucky. They get into the investments into stocks and they purchase stocks and they hit a jackpot. Boom, they get their money to do down payment of that. Or
Hmm.
some of them are really good at savings.
Hmm.
Some of them are really good. Um, Another thing I caught my eye. earlier this year, Garish.
Hmm.
About, if I'm not mistaken, if I'm going to refer back into my notes, but if I remember correctly, a good chunk of Canadians, we're talking about between 7 to 80%, do not even know what credit is. So
Hmm.
they don't even know what a beacon score is or FICO. They don't even know how to check. That's how crazy how
But
our education of finances is here.
but then why is that? Is that because they have never, I don't know, bought a car, or they never bought a house, or they never bought any other stuff which includes credit score? I mean, what are your thoughts on that? Because when you get a credit card and a car, I think you need a credit score. When you buy a house, you need a credit score. So what other purchases are there that you don't need a credit score?
So for over here, I want to say majority of a lot of things you do need credit in order when it comes to services, loans, um, even applying for. There was something that caught my attention that I need to have credit for. Even internet service. Yeah, it was internet service that you need to check your credit. I don't think it's a harsh credit check, to be honest, for an internet service provider, but it does make sense. Anything that recalls a commitment to something,
Hmm.
whether it be a loan or a service, then you need credit. Do you need amazing credit for something like that? Probably not, because we're talking about, 50 bucks minimum for a service. Now,
Yeah.
when you get to a car, your credit has to be established pretty decently.
Yeah.
Coming from a background of working at a dealership for 6 years, credit is also pretty mandatory for you to even apply for a car loan, for the bare
Hmm.
minimum to apply for like 0.99% for a finance or a lease.
Yeah. Yeah.
The reason why, what I believe in, why do people don't really know about credit? I think one of the reasons is we don't have a course to know about finances in high school.
Hmm.
They don't teach us that in high school. They don't teach us what is credit.
Hmm.
How do we learn what credit is sometimes it's through trial and error. People miss credit card payments and realize like, oh, why is my credit so bad?
Hmm.
One, because they miss credit payments. Two, they haven't opened up a credit by providing them, putting them their names into, like, phone bills or anything. Because majority of these kids nowadays, they have their phone bills of their parents.
Hmm.
For us to get a credit card, you have to be a minimum age of 18, if I'm not mistaken.
Hmm.
So, but when you're 18, your credit is it's fresh, like there's no record of it. So a person with no credit versus someone with bad credit, it's actually a bigger risk for someone with no credit. With someone
Yeah.
with bad credit, there's potential, like, okay, he had bad credit because of a miss error of like one or two payments, but he can bounce back up based on his record.
But Giovanni, just to be clear, in my time, they never really taught us finance either. Or they never really taught us credit either. But
Yeah.
in today's world, what I have been told is in high school today, they are teaching kids personal finance. So we are coming to a point to teach these kids as to how to finance and how to be bankrupt, how to be credit score, valuable and pay better and have no loans than really loans. So those are the things I think they're learning now as we speak. So I think we are getting better somehow. uh, so before you go away, even though that the light must have gone away and the darkness is gone on your end, before you leave, do you have any last words or any comments to any of my back to basic listeners and viewers?
So for anyone that wants to apply for a mortgage, I would recommend ask as many questions as possible. Who cares if you sound silly? If you have a trusted mortgage agent, they won't even care. They'll actually be thankful that you asked this kind of question, because honestly, the question that you probably feel uncomfortable asking, some other person's probably thinking the same thing, but they're in the same position as you are, probably being shy or feel, like they're not really educated to ask. There's honestly no harm in asking these kind of questions, because that mortgage agent doesn't even know. We don't read your minds, right?
Hmm.
We try to ask you as many questions too, like, hey, why are you getting a mortgage? Uh, has your job been affected by COVID? Like, what are your long-term goals? Like, these are the kind of questions to ask my clients, because I want to
Hmm.
make sure, what am I going to line them for? Is it going to meet to what they want to do in the future long run, kind of thing? Because I want to make
Hmm.
sure, once again, they're educated.
Hmm.
People that uh, people that I know of, like in terms, not personally, sorry, but in a grand scheme of things, what people do, they go to their own bank to try to get a mortgage,
Hmm.
and they think they'll get approved. Sometimes they don't, and mortgage agents has this bad omen where they think we're going to take advantage of them. That is not usually the case.
Hmm.
Um, Obviously, there's some divisions to every the profession and all that, but you got to ask the right questions and how and so and so on. So I think it's very best to ask as many questions as possible as a client to a mortgage agent. And if you have a really good mortgage agent, he'll answer a lot of questions that you'll know that
Yeah.
you want to know. Sorry.
Yeah, Giovanni, thank you again for explaining all the details, which I didn't even know, obviously, because from the U.S. and the Canadian side, we have to learn from each other and how the market kind of changes, and how the market does not change. I mean, those are the questions we should be asking. So thank you
Hmm.
again for spreading the education on your side, and thanks for coming here on Back to Basics and supporting me on my podcast here.
Of course, anytime. One thing I could say about for you, Garish, is like this is something that you could probably help educate, showing this video to your kids. Sometimes kids may not want to hear this from their mom and dad because they're gonna like, oh, like you're kind of like overflowing them with so many points and thoughts. But if they see someone like my age, they could like, okay, this guy knows what he's talking about. I can definitely relate because he's close to my age, all that stuff. Like this is a good reference to people like that are a little younger than us and all that are going into the future, buying a home, going moving forward, right? Because I'll be honest with you, I don't like to listen to my mom and dad most of the time when it comes to stuff like that in the beginning when I was younger. But I
Yeah,
look back at it, I'm like, damn, I should have listened to you, kind of thing. So
yeah,
that's another factor to why, going back to our previous point, why do people most of my age or so don't even know about credit,
yeah, yeah.
kind of thing,
That's
right? They probably have been told about it, but they kind of like brushed it off a bit because they didn't want to get into it because they're busy, having fun at their age. They don't really care about finances until they move up to like mid 20s and going on like, okay, I need to get my life together.
yeah,
And by that point on, it's a little too late to,
yeah.
but in my opinion, it's never too late to start. You got to start somewhere.
Yeah, absolutely, absolutely. Thank you again, Giovanni, for coming here and supporting me. And we'll definitely chat more on the other platforms that we usually hang out. And thank you again for supporting me.
Absolutely, Girish. Thank you for letting me be in this conversation. It is a privilege.
Thank you, thank you, thank you again. So, guys, we spoke to Giovanni about mortgage in the Canadian side, and there's a lot of things that I did not even know. But there's one thing that Giovanni did mention. Keep on asking all the questions. There's no stupid questions. It's just questions. As many questions as you can answer, because you never know. No one has asked that question. And if they have, it's okay. It's all good. But you didn't know. So, as usual, as always, what do I always say at the end? But wait a second. I do have a quote for the day from Back to Basics. And here's a quote for the day. The quote is: time is more valuable than money. You can get more money, but you cannot get more time. So, guys, as usual, as always, what do I always say? Everything in life goes back to basics, and that's what we did today, guys. Guys, take care, God bless, and keep on commenting on all my episodes as much as you can, because I will learn from you guys to make myself stronger and day by day and week by week. And the three things in every episode, including this one, makes it successful, which is the content, the guest, and definitely the host. Guys, take care, God bless, and I'll see you next week on Back to Basics. Next week's episode on Back to
Picking us
Basics.
apart. They said it's not funny. What is HBO doing? And so I wanted to write this memoir to talk about the fact that comedy is hard, and Comedy Central took a lot of work by a lot of people and almost didn't make it.
Doesn't it sound like that when you're starting a brand new business? It's almost like that, right? But when you're starting something new, you don't know where to start. You don't know if you're going to make someone cry or laugh. In this case, comedy, right? You just have to start somewhere. You think that there's a comparison, or there's no?
Well, that was certainly the case for Comedy Central. Remember, we had nothing. We had to plan this thing from scratch. It wasn't like we could say, okay.